Hey everyone, John Bulik here with the Summit team. If you've been scrolling through real estate headlines lately, you've probably seen people arguing about what or who is to blame for sky-high home prices. Investors, landlords, politicians, building costs, foreign buyers, you name it, and yeah, I've seen the comment sections too. Lots of passion, lots of frustration, and occasionally a solid point. But here's the truth. Housing costs are complicated. There isn't one villain in this story. So today I want to unpack what's really driving prices and what the data shows and what we're actually seeing here in Colorado, especially around Denver and the Front Range. According to Realtor.com, 93% of Americans say housing costs are too high. Only 3% think they're reasonable. And I don't think that shocks anybody. The top reasons people blame? Investors buying homes for profit, high material costs, landlords raising rents, government inaction. But economists point to something bigger. The U.S. is short roughly 4 million homes. Supply hasn't kept up with population growth or household formation. So while investors can be irritating, they're not the whole story. The investor debate, scapegoat or symptom. Nearly half of Americans blame investors, and I get it. During those unicorn years of the rock bottom interest rates, it felt like investors were everywhere. But the data says investors made only 13% of home purchases last year, and most were small mom and pop owners with 10 homes or fewer. Not Wall Street gobbling up entire subdivisions. Now, does that mean investors have zero impact? No. In certain neighborhoods or price points, they absolutely push prices higher. But nationally, they're not the primary driver. Here in Colorado, the bigger story is simple: demand. People want to live here. The mountains, the lifestyle, the jobs. We're a destination state, and demand pushes prices up. Folks move here for the quality of life and then complain about the cost of living here. The irony isn't lost on me. Why it felt like investors drove prices up. I'll be honest, even though economists downplay investors, I still think they amplified price growth during the low rate years. When interest rates are near zero, everyone can borrow more, families and corporations alike. Add limited supply and you get skyrocketing prices. Now that rates have normalized, a lot of investors are sitting on the sidelines. That's part of why prices have leveled instead of continuing straight up. So the real problem, supply, delays, and red tape. Long term, prices are driven by one thing. We don't have enough homes. And it's not because builders don't want to build, it's because the process takes forever. Zoning, regulations, permit fees, park fees, road assessments. By the time a builder breaks ground, tens of thousands of dollars have already been added to the price of each home. A $450,000 starter home becomes $600,000 before a nail even hits wood. It's not all gloom and doom. Before this all sounds too bleak, here's the perspective. Housing goes up, dips, goes up again, always has, always will. Even with today's affordability crunch, homeownership is still one of the most reliable ways to build long-term wealth. Equity grows quietly in the background, and here in Colorado, the fundamentals remain strong. People want to live here, and that's the ultimate driver of value. Whether you're buying your first home, downsizing, or investing, the smart play isn't timing the market, it's understanding it. There's a lot of noise and finger pointing out there, but real estate isn't about blame. It's about people, opportunity, and planning ahead. If you want to talk about how these trends play out in West Metro Denver, drop a comment or reach out. I'll share what I'm seeing on the ground and help you plan a smart next move. I'm John Bulik with the Summit team, and I'll see you next time.